Hey guys, welcome to another episode of the Ashwell Show. I do this show every single week for those of you who are trying to invest in passive real estate and other passive investments, but have just gotten stuck in the analysis paralysis mode, lost all your confidence, or maybe you actually have a few deals under your belt, but you've hit a ceiling achievement with your portfolio, or maybe you're just overwhelmed by all the information out there. If this is you, you're in the right place, whether you've never invested before or you have several investments under your belt. You see, my name is Whitney Hutton. This is me and my crazy crew, and this is the exact reason why I invest in passive investments, including real estate. You see, I started off in 2002 fix and flipping and house hacking and realized that I was able to build up equity alongside my everyday like 9 to 5 job, but I didn't have financial independence or financial freedom. I literally created another job for myself. And it was when I was able to kind of put my finger on it, on the fact that I needed to create passive income, that paycheck that's coming in every single month, and do it in a conservative, safe manner. That's really whenever I started blowing the doors off of my investment portfolio and achieving those results that I'm sure all you guys here are wanting to achieve, which is having, just control of your time, freedom to do whatever it is that you want in life. And, over the past few years, my husband and I have been able to build up a quite sizable portfolio, mostly in residential real estate and other passive investments. But honestly, none of this was possible until I was able to secure those first 30 BRRRR properties, and especially using other people's money. And this can include bank money. It doesn't have to be private investment. Once I was able to do that, we were able to throw gas on that fire and really scale. And you know what? I was able to do this all while working a normal job, wife, being mom, and taking care of other family members. So I know that a lot of you guys out here struggle with that. How can you possibly become an investor and start scaling a portfolio like this that can help you achieve your dreams while you're working, taking care of family? And you guys can do it. So let me show you how. But what makes what I'm going to share today so different? Well, I'm sharing with you through these webinars what I have found out works over 18 years of investing. And it boils down to three things. One, you have to have a specific investing roadmap. Okay, you have to have a plan. And that plan has to be a surefire plan that's going to get you to financial independence in a fraction of the time. Most people go into investing with no plan, and they just kind of like bob and weave and wander around, and then they wake up 3 or 4 or 5, 10 years later and wonder why they are no closer to their goal. You have to have the right plan for you. Number two, you have to have a formula for repeatable, simple systems and a team to help you execute on these systems. Otherwise, what did you just do? You created another job for yourself. And I bet you get into real estate investing and other passive forms of investment, not to have another job, but to get your time and mind share back so you can do other things. Then you have to learn how to scale. Okay. And I get a lot of pushback on this area of the plan, this particular pillar, but you have to have the ability to reinvest your profits. Okay, any business does this, and to scale. And you can do this much faster if you can learn to leverage other people's money. And yeah, this can be just as simple as bank money or using other investors' private capital. All of this, we have to learn how to use it safely to accelerate your wealth build. Okay. And when I learned how to do all three of these things, put these three major pillars in place, business pillars in place to scale my portfolio, my results are astounding. I now have 100% choice on how I spend my time. And I'm choosing to spend it here with you today to help you open up the doors, bust through an obstacle, and go to that next level. So today, we're going to focus on the plan part of the pillar. Okay. And I call this part of the plan the power of zero. Now, that actually is the title of a very popular book by David McKnight. Okay. And, we're going to kind of dive in a little bit into like, what are the base foundings of this book? Okay. And this is really important. Okay. A lot of investors get into passive investing, be it notes or other forms of investing and even real estate, and don't really fully understand how their investing plan can actually help them achieve wealth faster. Okay. okay? They just look at the cash flow or the cash on cash returns or the appreciation numbers, but they don't take into that holistic plan of what it is you're really trying to do, and that is to get to zero. And let's define this, okay? So after inadequate cash flow, okay, and cash capture, taxes are the #1 eroder of wealth, okay? And a lot of people here that are on this webinar understand they probably have, you probably have like a retirement account, probably heavily invested in 401k, maybe a traditional IRA. If you're super savvy, maybe you've already rolled a lot of that out into a self-directed environment, okay? However, there is a freight train in this 401k account, and we're going to kind of pick through that. Now, guys, I am not a CPA, financial advisor, or a legal professional, okay? This is hiding right under our nose, and I'm arming you with information so you can take this information back to your professionals and ask savvy questions so you can actually avoid this freight train. And here's the cool thing, okay? Now, if you, and I'm going to get to this freight train, this tax freight train that's hiding in plain sight in your 401k, if you've got a retirement account or a traditional IRA, the thing is you get to control how much you pay in taxes, okay? For some of you, that might actually just blow your mind. You might feel so buried from your tax bill, and that you're just like, you don't know how you're ever going to get ahead. If you can get rid of this #1 eroder of wealth, okay, or significantly reduce this, you are going to be cooking with fire. So there are essentially 3 assets that do not trigger what we call provisional income, okay? So let's fast forward here like 20, 30, 50 years, and you go to retire, okay? The government is going to calculate your retirement, and if Social Security is still around, then that could be an additional stream of income, okay? Now, I know there's a lot of questions around that. We're not going to get political here, but if you are earning income from other sources, that actually gets calculated into how much you will pay into taxes from your Social Security tax. Now, many of you are like, whoa, time out. That money's mine, okay? I paid into the system for 20, 30 years. I should get it back out. No, you actually might have to pay taxes on that, get double taxated on that, okay? Now, again, not a tax professional, so there are some much deeper nuance here, but there are 3 assets that do not trigger what we call provisional income, meaning when you draw income from these 3 assets, it's not figured into this equation to where you're going to get taxed, okay? Now that's Roth IRAs, okay? Not traditional IRAs, not 401ks. I'm talking Roth IRAs, okay? That money has gone in, you've already paid the taxes on it, and if you take it out after 59 and a half, it can go in tax-free, grow tax-free, and come out tax-free. Life insurance retirement plans, okay? Fancy word for cash flow life insurance, okay? If this plan is structured correctly, okay, there's another part of the tax code that allows income from life insurance plans not to be taxed, okay? Then also IRAs. Now you're like, whoa, back it up, Whitney. You already just said that 401ks and IRAs get taxed. They do, but you have this little number called a required minimum distribution when you retire, when you hit 70. And any income you draw off of your IRA, if it's below the required minimum distribution, okay, or excuse me, if your required minimum distribution is below your standard deduction, okay, on your tax return, that actual money out of the IRA can come out tax-free. Now, right now, for a couple, that standard deduction is about $24,000 to $25,000. Okay, it's completely at the whim of the government. Okay, they can change that. Just a couple years ago, back before 2017, it was at $12,000. Okay, so as you can see, that number can get manipulated, and any dollars that come out, if your required minimum distribution is above $24,000, $25,000, whatever is set by the government, now you're getting taxed. Okay, and I know for me, I plan on living on a lot more than $24,000 a year. So as you can see, you need to take control. Okay. And did you notice that I didn't mention anywhere in here about cash flow from rents? Okay, you guys know that I love, 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 love real estate. Okay, it's so powerful. You get paid 5 different ways. simultaneously at once, especially if you do it right. But cash flow from rents was not, on this provisional exemption list. So how do I account for this in my plan? Well, you see, the IRS is my partner in real estate. Okay, and because we're partners, they want me. The tax code is actually telling me that we need more investors in real estate. Okay, so and through this partnership, I get depreciation. If I'm doing any sort of value add to the property or rehab to the property, I might get accelerated or bonus depreciation. Okay, and this might require me to do what we call a cost segregation analysis. All right. And then also the IRS allows me, when I go to sell a property, to do what we call a 1031 exchange. Essentially, move my dollars, my capital gains up into a larger investment and keep it invested in real estate. And they're going to continue to give me tax breaks on that. All right. So that's kind of how I get around this whole provisional exemption list with cash flowing real estate. Okay. So essentially, I think if you do it right, there could be 4 assets on here. Now, let's talk about the impact of all this. Why you're like, Whitney, retirement is like 20, 30, 40 years away from me. Like, I'll handle it in 10 years, 20 years. Okay. I'll worry about it when I'm 50. You see, the assets in your tax deferred account, like your 401k, your traditional IRAs, okay, it's compounding growth, but it's also compounding the taxes for you. Okay, right? All that bill is deferring to later in life. It hasn't gone away. And remember, I mentioned earlier, when you cross the Social Security threshold, okay, for whatever that provisional income threshold is, you actually jump up. It's not, a tax bracket, like say 20%, 30%, 40%. I know we're all really concerned right now where our tax is going. It immediately jumps up to 85% social taxation on your Social Security. Okay, that's a big chunk of change that gets cut. And here's even the more the variable that's even more outside your control is that laws can change between now and then. All right. So let's recap that. Assets in those tax deferred accounts, they're compounding growth, compounding taxes. When you cross that provisional threshold, income threshold, your taxation doesn't go up by 10%, 20%, 30%. It jumps up 85%, and the laws can change on you. So what can you do? Okay, I'm all about empowering you. What can you do? Well, if you believe taxes are going to rise, this could be the lowest tax rate that you will pay ever in your lifetime. That is a very real possibility. Okay. And right now, our current tax rates are locked in, with the 2017 Tax Cuts and Jobs Act until 2024. So you have a golden window of opportunity to move assets into other buckets, okay, and lower your tax bill, okay? Now, does that mean you don't have to pay any taxes if you move those assets around? No, I did not say that. I'm just saying you could actually significantly reduce your tax bill now. Now, don't, unless you're a tax professional and you fully grasp this concept and you can do it on your own, that's one thing. Most of you guys are not tax professionals, so you need to leverage your qualified professionals. Make sure you work with somebody that understands these concepts and that will actually help you with a plan to convert the assets. Okay, all right, maximize this for you. So here's a quick little roadmap. Okay, this is actually taken from page 79 of the book, From the Power of Zero. Okay, and I have the old version of the book. Okay, so I don't know what page it's on from the new version of the book. But here's like a little snapshot of a roadmap. Okay, and this is just one little thing that I talk about with my clients when we are talking about how their roadmap to financial independence and financial freedom through passive investing. This is just one little nugget that we talk about. Okay, but simply, as you can see here, we're shifting assets. Okay, so we're definitely going to keep some money still in cash, okay, in an emergency fund. All right, remember these taxable accounts, even if you have it sitting in a bank earning 0.01% right now, that 0.01% you're earning is getting taxed. Okay, so you're eroding your wealth, and we're not even talking about inflation here, guys. All right, so here, perhaps shifting some of your taxable income into a tax deferred account like a Roth, a life insurance retirement plan, or doing some sort of backdoor Roth conversion. Sitting down with a professional, looking at your 401k, non-deductible IRAs, okay, in anything that you have in here, that once you definitely want to get your match. Okay. I believe in people getting their match from their employers, especially if they're 100% invested at the time of the match. But shifting anything that's going to trigger, be above the standard deduction, into some sort of tax-free bucket. Okay. And remember, for me personally, I do include real estate over here. Okay. But for some people who don't want to be in real estate, these are the three options that you have. All right. So I wanted to arm you with some questions. Okay. So when you go to talk to these professionals, you're going to want to identify the financial side and the tax side. Are they savvy enough to be able to understand these concepts and help you with them? So on the financial side, how can we identify all of my income streams in retirement that I'm going to have and plan not to trigger provisional income in retirement? That's the question I would ask. Okay. If they don't understand provisional income, they're not your person. Move on. Okay. Also, what's my plan to convert assets prior to retirement so I don't trigger provisional income? Okay. Again, that's kind of a weed out question. This is to help you find that right professional. And on the tax side, another question you can ask is, how can we use today's tax code to execute on this plan that I showed you on the previous slide? And fully understand what are the drawbacks if you wait to execute this plan. Okay, you want to understand what it can gain you, but also what is the downside if you choose not to take action. People are motivated by pain. Unfortunately, most people are motivated by pain. So get to the pain, understand what that impact is to you if you decide not to take action. And again, I can't stress this enough. Make sure you work with a qualified professional to help you come up with a plan, okay? Because you want to fully understand what goes into play when converting these assets. Okay. Ooh. So for me, I sat down with this with my professional. I'm going to back it up so we stay focused. And for me, when I ask these questions, this is the plan that we came up for me. Okay, so for me, with my assets, I'm keeping 6 months of personal and rental expenses in cash. Okay, I like the comfort and security of that. I'm willing to take a little bit of a tax hit to have a little bit more in cash, but that's just me. Okay. For my tax deferred accounts, okay, my husband and I's tax deferred account, he has a TSP account. He's going to continue to get the match on that account. Okay, I'm no longer going to contribute to my tax deferred accounts. Now, I am going to maximize my tax-free accounts. And there's a few other things here that I'm going to mention, so take note. Okay, so for us, we're a family and we know we have healthcare costs. So we're going to maximize our HSA. Okay, I love it. I've talked about it here before, and I'll probably do another webinar on it here again. It's almost like the ultimate retirement account. Goes in tax-free, grows tax-free, comes out tax-free. I love it. Okay. Whereas a Roth, it goes in tax, grows tax-free, comes out tax-free. I'm also going to max my dependent care FSA. Okay, we have a child. We're going to get a 33% break on those child care expenses up to a certain dollar amount. So I'm going to take care of that. We're also going to max fund 2 cash flow life insurance policies. Okay, for us, we're continuing to build our portfolio. So we're going to do this for infinite banking reasons, okay? Not necessarily for income reasons, but so we are actually kind of off the grid with our expenses and we can write our own loans as we continue to build our portfolio. And then we're also going to max 2 Roth accounts, okay? We're going to use qualified retirement plans because we qualify for them. And then once we get all of this in place, we're then going to max a cash flow life insurance or a Roth or both for our daughter, all right? So as far as my cash flow, I'm going to treat that a little bit different. Okay. Remember, right now I'm still in the accumulation phase. Okay. But I'm going to continue to use the losses to keep my rents tax-free now and in the future. And then I'm going to keep an eye on my depreciation schedules and continue to trade up assets using a 1031 exchange when my depreciation schedule starts winding down and no longer covers the cash flow and keeping it tax-free on my assets. For me, that's a trigger. It usually starts happening in about year 10 of the hold when you have your depreciation will, inline depreciation will stay stable, but your cash flow starts to grow. You want to keep an eye on that and maybe start looking at 1031 exchanges. And then, for me, I'm also going to continue to qualify as a real estate professional so I can accelerate my asset conversion using my losses. Okay. Not everybody can achieve this because if you're still working as a W-2 employee, that's really hard to get to there. But it's something to keep in mind, something to aspire for if that's the way you want to go. But you can still look at all these maneuvers you can do before you have to get to that real estate professional piece. Now, again, when I sat down and asked these questions of my professional and we laid out the plan, if I had waited 2 years, okay, 3 years actually, after 2024, I could potentially have paid 20% or more in taxes if I had just waited 3 years. Okay. And I'd lose out on all of that compounding if that money was lost to taxes. Okay. It's not just about that 20% tax bill, it's the compounding and the growth on that 20%. Okay, so I hope I've kind of blown your mind on this. You guys need to start taking a look at this. This is gold. All right, so my challenge to you is very, very, very simple. One, read. Okay, go look up The Power of Zero, The Tax-Free Income for Life by David McKnight. Now, hashtag or caveat, asterisk, he's very much into cash flow life insurance policies and annuities. Okay, the books are worth their weight in gold, even if you never invest in one of those assets. Okay. Stay focused on the principles in both of those books. Okay. If you don't want to be sold a cash flow life insurance policy or a life insurance plan or annuity, you don't have to buy one, but listen to the principles, read the principles, and take heed in them. And then also the cash flow quadrant. Make sure you read. And then most importantly, take action. Sit down find a professional that understands these concepts and can help you craft a plan and convert these assets, taking advantage of our low tax rates that we're probably going to have, the lowest in probably our lifetime that we're going to have starting here or for the next 3 years. So guys, I hope you found this time was such an investment for you. And if you want more help like this, crafting your roadmap, getting your systems in place for passive investing, and then scaling your portfolio, I invite you to join our Investor Accelerator Mastermind. And you see, this mastermind is for whoever is just starting out investing and doing this on the side, or maybe you're pretty seasoned, you got a few deals under your belt and you're doing this full time and you just know you've hit a level of achievement and growth. You see, I consider this investor like a table or accelerator like a table. You have 4 legs of the table. If you chop any one of these legs off, the whole thing falls over. So let's talk about that. You have to have the right education, okay? And we will give you lifetime access to the Investor Accelerator course, okay? Then you have to have the right investing roadmap in place, okay? We're gonna help you create a lean investing roadmap and give you all the right tools to help you build the right mindset, vision, and strategy so you can continue to level up as you grow. And then it's about the right systems and team. So we're going to help you create the right systems and team that will help you run your investing business with ease, okay? Not make it another job, but so you can actually continue to compound your growth over time. And then help you focus on how do you scale, okay? So we meet every 2 weeks, and these meetings are focused on business growth and investor knowledge to help you rapidly scale your investing knowledge in your portfolio, okay? And then we have a couple other touch points through weekly hackathon sessions and ongoing support in our community to help you succeed in between our meetings. Just think about it. With the right education plan and systems and support, how far could you scale your investing portfolio? Well, I thank you so much for investing your #1 resource with me today, which is your time. And if you want to learn more, I invite you to jump over to ashwealth.com/apply. Click on that button, fill out the quick little 10-second application, and we'll hop on a call and make sure that this program is right for you. You guys have a fantastic day, and thanks so much for joining me.